There's a big difference between being a financial planner and being a salesperson who just happens to sell a financial product. Money's a communication mechanism. It helps people communicate what you value, but it also communicates what I value. Wealth is not just your money. It's your time, your talents, your relationships, your money, and helping people actually identify how they can use all their resources in the most efficient way.
Welcome back to the Hosting Bitcoin show. Today we've got Jim Crider. Jim is the CEO of Intentional Living Financial Planning, which is a financial planning firm focused on integrating Bitcoin into people's portfolios. Jim's personal expertise goes beyond just advising people on their numbers. He helps clients evaluate the why behind their investments and helps them embrace Bitcoin's role as a disruptive asset in their wealth building journey. Jim, you and I met last month in Montana at the Intentional Bitcoin Retreat, which was absolutely a blast. You completely ruined me for every other retreat or event that I could possibly go to, but super thrilled to get a chance to pick your brain and figure out how you advise people on building their ideal futures. So thank you for joining.
Yeah, thanks, dude. Thanks for having me. This will be fun.
So love to start with maybe your light bulb moment or what really clicked for you when you first started to understand Bitcoin for yourself, and then maybe how you started advising people to integrate it into their financial planning journeys.
Yeah, I guess I first heard about Bitcoin back in 2012, but completely dismissed it. And then started becoming a little bit more familiar with it in 2015. But again, that was totally as a speculative. I don't even know if I call it a speculative asset. It was just it was a speculative mania thing that was, sort of curious, I guess. Again, sort of shelved that. 2017, I was working at Fidelity at that point, and people were reaching out, wanting to mortgage their house to buy Bitcoin. And unfortunately, most of these people were doing that at like 17 grand. They weren't doing it, at the prior low. They were doing it at the high again. So yet again, had a bad taste in my mouth that Bitcoin equals uneducated speculators trying to make a quick buck. And then finally, March of 2020 came around, and it became apparent very quickly that, hold on, it looks like the government's going to shut everything down, but there's talks of them somehow stimulating the market and the economy through giving out money. That's not how money should work. I need to quickly do some research to understand what's going to fix this, or what's the solution. So I was looking then, like, what is money, and what's the best form of money that cannot be controlled or manipulated at this time. So, obviously, I'm really familiar with stocks and everything, and relatively familiar at that point. I was relatively familiar with real estate and gold, and somewhat familiar with Bitcoin. So I took a little bit of familiarity and took a few weeks of going on a lot of really long walks and trying to make a decision of which of those assets I feel was the best form of money and the best place to park our money moving forward. So that was back in March of 20. And at that point, moved my wife, her name's Kendra, Kendra, moved everything that we have into Bitcoin. I was at another firm at that point, so my hands were tied about talking about Bitcoin with clients, which was really painful. I tried in every way to make that possible, but eventually had to leave that firm. Started my company in 22, and it's been a pretty large role in how we advise our clients.
So how is Intentional Living different than other financial planning offices? Obviously, we mentioned that you're actually allowed to talk about Bitcoin because it's your own office, but how is that different in terms of how you talk to clients?
It changes everything. Like there's nothing about my job that has to be or is transactional in any capacity. I'm a really bad salesperson, and frankly, if I was held captive at another firm, I would be held captive to their sales metrics or whatever they deem is best for their clients or for growing their bottom line, versus my job. And I answer to my clients, and I answer to how I think this should be run. And my job is to help people in the most efficient and effective way articulate what's important to them and align their money with that. That's what I do. And because of that, that allows me to not be, again, held captive to anything that I feel is not best for the people I work with. Or heck, the people I don't work with. There's people who come to me routinely who describe what they're looking for, and I have the ability to say, hey, that's not me. You should work with this other person instead. And I love the freedom to do that versus being in a position where I feel like I have to bring on every client possible when maybe that's not the best thing for them. So just the freedom to really understand someone and provide unbiased advice about what I feel is best for them. I mean, the type of planning we do it's more about life planning. I believe money is a tool to help you do what's important to you in life. And of course I care about your money, but the reason I care about your money is because I really, really care about you. And, I have that space to be able to go and dive into people's lives and then simply align their money with that. And of course, the whole Bitcoin side of things, I feel like that's really important for people to own. And, I'm not handcuffed in whether or not I can talk about it, or even if I could talk about it, the capacity in which I can talk about it. Like, oh, you have to do that through our ETF, so we can pick up, some basis points on that or whatever. Like it's amazing the freedom just to do what I feel is best for clients.
I've had friends and even team members who've worked at other financial firms, and some of the things that they've told me is in the past when they worked for these firms, they couldn't even talk about Bitcoin because that firm didn't have a way to monetize it. So maybe talk for a minute, because this is kind of an opaque industry in a lot of ways. Some of the incentives that go behind, like you mentioned, sales quotas, there's also these kind of kickbacks for getting people into other products. How does this work on the back end that people don't really get in the financial planning world?
Well, I mean, there's different types of financial planning companies and compensation structures, and you first have to recognize that everyone has some sort of conflict of interest. Personally, I try to handle that in a few ways. One, I try to remove as many conflicts of interest as possible, and then I try to obviously put. Everyone's going to say this, but I really do try to put our clients before my needs. No one's not going to say that, but that's true. But there's advisors out there who. Here, I want to headline with this. There's a big difference between being a financial planner and then being a salesperson who just happens to sell a financial product. And you have to start from that place. I'm not held captive, again, to sell any product. I don't make commissions or things like that, and there's nothing wrong. Maybe that's what you do, but you have to start with admitting that, hey, I sell insurance and I want to put you in insurance because that's how I'm compensated. Like, all right, just admit that. There's nothing wrong. People probably, a lot of people need insurance. But there's that, I see it all the time, this facade of, oh, I'm a financial advisor. And it's like, dude, you have an insurance license. And if all you have is an insurance license, everyone you're going to you're going to think that the best thing they can have is an insurance policy. And is that what's really best? Like, what are the chances that's best for 90 out of 100 people? Like, really, really slim. But you're seeing everything through that lens. And I try to check my bias. Like, am I seeing Bitcoin? Am I seeing everyone through a lens of like, you should own Bitcoin because, or am I taking myself out of a situation, truly assessing their life, their values, their goals, their convictions, making or helping them make guided decisions through the lens of, I'm just partnering with them on that journey, serving as a guide.
So you mentioned that some of your early kind of experiences that left a bad taste in your mouth were just how short-term thinking and speculative you felt like it was when you were first exposed to Bitcoin. When you're advising clients, what are some of the things that you've learned when you're trying to integrate Bitcoin into their long-term planning and getting them to see the long view on this?
It has to be anchored in education. True deep education is what will actually build deep conviction, which is what's going to allow you to weather storms and also not get emotionally erratic on the highs and the lows. That's where you have people who get wiped out from a 69 to a 16 drop because they don't understand what they owned. You have people who are trying to time the volatility of 58 to 62 back and forth, and they think it's a way to make a quick buck. You have people who, once it gets to 73 again, they're going to hop out because they made their money. And not that any of those in themselves are necessarily the worst thing. It's the reason you have that is because They don't understand the solution that they are trying to solve for. That's the problem. You have to start with articulating what is Bitcoin, why was it created, and why is it important. If you don't start with that, then you think that Bitcoin is a non-solution to a non-problem, and the best thing it can do for you is make a quick buck, versus understanding that Bitcoin is money. It's the best form of money we've ever had, and you should probably get some. And you're not going to get some so you can make a dollar here and there. You're getting it so you can actually build your start saving actual money. But it has to be built through education. So I mean, really what we do, like I've taken a lot of flack over the years from Bitcoiners for not having like Bitcoin on our website. Like I don't have a big orange sign if you go to my financial planning website, but frankly, I do that for a lot of reasons. Like I do have a fair amount of our clients who are hardcore Bitcoiners, but most of our clients are normal people. It's like people like your parents or grandparents. And maybe your parents are crazy, but most parents, like in their situation, if they're looking for a financial planner to help them with navigating their taxes and retirement planning and these sorts of things, they log in and they go to a website and they see a guy with Bitcoin on their website, they're probably not going to call that guy. They're not going to give him the time of day to hear him. And I didn't want to do that. So I don't lead with Bitcoin. I don't lead with it in marketing unless I'm marketing to Bitcoiners. But I don't lead with it to normal people. I don't lead with it like in what we do. I don't even talk about Bitcoin until they've already begun working with us. I've in fact demonstrated that I truly am not a moron through showing competencies in other areas, tax planning and estate planning and these other places that I can build trust. And then finally, after several conversations, I let them know, hey, something usually when we're going to talk about investments, it's like, hey, there's something you should know. It's going to sound like I'm nuts, but you should know this, that I and all of our clients actually own Bitcoin. And then we go into it from there. So, and then that conversation, we have to go deep into the education piece, which has allowed us, we have a 100% adoption rate for our clients at a pretty steep level of allocation to Bitcoin. And again, that's coming from basically 100 families that are mostly like your, normal people. So yeah, it has to be anchored to that trust and education.
So it's almost a little bit surprising to me just knowing how much you care about this asset and how much you believe in it. And I'm totally with you. How would you describe the ideal client for you then, since it's not necessarily a true orange-blooded Bitcoiner coming straight to you? It might be someone who's taken the roundabout path. How would you describe the ideal person you work with?
So I don't want to be a generalist. I think that's really important. No one wants to work with, if you go to a lot of financial planners websites, it says like who we work with, and you click on that and it'll say like, we specialize in individuals, families, doctors, business owners, and women. It's like, one, I don't know why women don't fit with individuals. What is it? Like, where does that come in? And then if you specialize in everything, you don't really specialize in anything. It's like a few years ago, Kendra and I were looking for ice cream, and I looked, my wife, she's super picky on ingredients. And so I was like, all right, what's in this ice cream? And it just said made of natural and artificial ingredients. I was like, wait, that's everything. Natural and artificial, that comprises everything in the known universe. You could just say made of ingredients, So that's what a lot of financial planners you see do. It's like, we specialize in everybody. It's like, what you're saying is you don't specialize in anybody. So I don't want to be that guy. Now, with that said, I'm going to sound like I'm double speaking. When I first started my company back in 21, for the first 2 years of this company, I only brought on young families 45 and under. If you were over 45, I would not bring you on as a client. I specifically wanted to work with people who wanted early financial independence, navigating life and decisions as a family, so you can have more time to spend with the people you care about. Now, with that said, I am wanting to grow an enterprise business. And as I do that, I'm highly motivated to impact lots of people's lives. So frankly, at this point, I could stop growing my business. And if I stopped growing, I could probably work 2 to 3 days a week, make a great living, and play a lot of disc golf and hang out with my kids. But I'm really motivated to help a lot of people. So about a year ago, the next niche that I wanted to go start going after is pre-retirees/retirees. So for instance, like my parents moved back from Tennessee to Texas, and they needed a local financial planner. And I started looking like, maybe I don't want to work with my parents. I'll find someone else. And I got to the point I was like, man, like anyone else I send them to is not going to talk to them about Bitcoin. And I'd be doing this a massive disservice. So I need to work with my parents. And if I can't send my parents to someone else, I can't in good faith send someone else who's 64, who comes to me and says, hey, Jim, I need a financial planner. If I can't send my parents to this person, I can't send this person to them either. So at that point, I decided, all right, niche number 2 is coming up. So now we're working with retirees as well. And the vision here is, again, that's where I mentioned earlier, this whole generalist specialist thing is I don't want to be a generalist. So as our firm scales, I will have the vision here is to have niche groups. So the name of our company is called Intentional Living. And I want to have groups of 2 to 4 advisors who work with intentional legacy. And they only work with people who are in retirement. They're helping them really with legacy planning and intentional entrepreneurs. They don't work with old people who are retired, and they don't work with CEOs. They work with entrepreneurs. That's it. That's all they focus on. They don't care about Social Security updates. They care about helping entrepreneurs. And then intentional executives. They don't care about entrepreneur side of things. They don't need to know about the retirement side of things. They're really good at executive compensation and the tax planning along that. So we can allow us to niche down, but also reach a lot of lives. That's where I'm at now.
How do you get people to uncover their why?
You can't. What I have found, one of the worst things to do is to lead with a question. Hey, Bo, what are some of your goals? Because if you do that, maybe I would assume you, Bo, you're probably a little bit more familiar with goals that you have, being a businessman and a good dude who I would imagine you seem like a pretty introspective type guy. But most people, you've said, hey, tell me your goals. They usually just start listing off things that maybe they sort of want to have or do. But a lot of times, frankly, they're just sort of like regurgitating things they've heard other people say that their long-term goals are. It's like, I guess I want to retire and get a house at the lake and, I don't know, get a boat. They say things that aren't that important. So you have to go roundabout. And really the important thing is understanding not just their goals, but the underlying informant and motivator of those goals. And I would call that your values or your why. So we have a handful of questions that we go through with all of our new clients that are very invasive, frankly. There's 3 questions that we start off with. We give us homework, and if you're single, we tell you how to go through it. If you're married, we try to have you structured as a date night because they are really good questions to go through with your spouse. And those questions, we give instructions of, hey, treat this as a date night. Give yourself a couple hours, like have a bottle of wine, go through this. And the first question is, if money was no longer a care or concern, what would life look like for you? What would you do? How would you spend your time? And then once you've answered that in full, then you go to the second question, which is essentially if you went to the doctor tomorrow for a routine checkup and you find out that you have 5 to 10 years left to live, what would you change about now? And then lastly, if you went to the doctor tomorrow for a routine checkup and you find out that you have just 24 hours left to live, having that news sink in of your finality, what did you miss? What will you not get to experience? And having people sit on that really starts having people ponder like, man, usually it comes back to time with people. That's really important for most people is just that time in those relationships. And there are the things I never got to do this. And of course, money somewhere plays a role in that. But usually it's more sensitive to, your total wealth. Wealth is not just your money. It's your time, your talents, your relationships, your money, and helping people actually identify how they can use all their resources in the most efficient way. So we go through those questions, and that's really our first meeting as a client is primarily unpacking those. And we also go through some other questions. Like I love just having conversations with people, like just long, good conversations. So another question that I love to ask is like, hey, tell me about just like, what's your perfect ideal day? And then also if this could be if you're working or maybe if you're not working, you sold your business or whatever, What would an ideal year look like? So throughout the year, where are you? Who are you with? What are you doing? And going there allows you to hear from people like, actually I'd probably, I don't want to be done working. So I'd probably work some and then spend some time in the mountains and go see the grandkids more and these sorts of things. So it allows people to step back and realize that like, I don't have to retire at 67. That's not the goal. It's more of time freedom and the ability to be with the people I care about, doing the things that I enjoy. That's what's important. Retirement is just a label you've put on it. And if you're going for retirement, but it's not retirement you want, it's time freedom and flexibility, you might be going the wrong direction. There's Stephen Covey talks about climbing up the ladder that's leaned against the wrong wall. And I've seen that way too many times. Is people are super successful in something they don't care about whatsoever. And that's really sad because you can spend decades climbing that ladder just to realize, oh crud, it's on the wrong wall. I thought I wanted that thing, but not even close. That's probably the most sobering things I see regularly, especially from older clients. And that's another reason I went young first is just I've had, thousands of people tell me, man, if I would have met you in my 30s, it would have all been different, just from compounding and the decisions and so many things. But I've heard a lot of regret. And one of the biggest regrets is looking back on their life, they didn't spend the time with their kids and their spouses they wish they would have. Maybe they have a lot of money now, but like they don't really care. And it's really helping people identify like, man, this is what I want. I want this. Okay, well, maybe that means giving up money. Like, who cares? Money's not the goal. Money was a tool to help you do this thing. Let's do that thing. And sometimes it means amassing more money or being more efficient with your money. But again, that goes back to, I really care about you. And I guess, yeah, I care about your money. You pay me to care about your money. Of course I do. But it's because I am very invested in what did you say is important to you? All right, how do we do that?
It's very much like, the advice that people get when they're starting a business or they're going into entrepreneurship is the how is so much less important than the why. That if you've got the right reason for doing something, the right why, the how becomes far easier. Whereas if you've got a perfect plan and you don't understand why you're implementing it, even with all the tools at your disposal, you may end up either, unsuccessful or unfulfilled, either one being, a failure. So it sounds like to me, what some people might consider a misconception when they're getting into financial planning is that this is all about portfolio balancing and, optimizing my asset allocation. And it's so much more about discovering what you want to do with your money and what money means for you in terms of a human life.
Yes. Now, of course, I couldn't be a moron and just get people to talk like, man, I really import these things and I just lose all their money. That wouldn't be good. But yeah, I have to anchor into so what we do could be charted in like a flow chart or like an order of operations, I guess. So that the first place of that order would be your values. Okay. We know what comes next is your goals. And again, I mentioned earlier that starting with goals can be really dangerous for a few reasons. Usually they're arbitrary. Two, your goals are probably going to change. Like, Bo, the goals that you have today are probably way different than they were a decade ago. And a decade from now, they're probably a lot different than they are today. And if we understand that and at least admit it, like, okay, cool, yeah, that's fine. So what we want to do is make sure that your goals are informed by the underlying value. For instance, like, I have 4 young kids, and it's like, I really want to be able to have significant time with my family, especially while they're, in our home. That's really important. Now, a goal I have, and it's absolutely a silly goal, but I would love to have a place in the mountains. And the type of place that I want, I'm really frugal, except for on a couple things. And I would love to have a really nice house in like Telluride or Big Sky, a mountain town. So if my goal was I want to have a mountain house, let's say a Telluride mountain house that I want would be $7 million. If that was the chief aim, I would be really apt to work an outrageous amount and sacrifice my family on the altar of the financial success. So I'd go after that goal. But the problem is I never got to the point and I didn't say, well, why? Why do I want that? It's like, well, man, I want that because I want to have a place so I can make moments and memories as a family. It's like, oh, you don't want a mountain house. You want a place that you can get away and spend time with the people you care about. You want time with the people you love. That's what you want. It's time with the people you love. And a house in the mountains is just a place for y'all to gather and create those memories. It's like, yeah, that's what I want. So if you go there, then you realize it would be outrageously foolish for me to stiff arm my kids so I can work 90 hours a week so I can get us a place in the mountains, when after all that, all I wanted was time for my kids. So it has to be informed by values and then the goals. And then there's decisions. Again, going through this flowchart. So values, goals, decisions. Decisions is twofold. One, it's starting off with just recognizing there's opportunity costs in everything you do. Everything has a trade-off, be it direct or indirect, intentional or not. You are, if you're choosing something, you are giving up something else. And it's starting off with recognizing, like, okay, if I want to have significant time with my wife and my kids, and I also want to have a place in the mountains, well, time can be expensive, and a house in the mountains is definitely expensive. And I can't afford to do both of those and do all these other things. So is time in house in the mountains more important than going out to eat 4 days a week? Yeah, it is. Okay, well, let's make that decision. And unfortunately, most people make financial decisions off of a whim rather than intentionally. And all of a sudden, they are just going through life using their resources, again, their time, their money, their relationships, their talents, accidentally. And it's not actually aligned with anything they care about. And they look up, it's like, I have all this crud and I spend all this money. I don't even care I don't even know what it's for. So we want to start off with like, okay, what are you going to have to give up on and what can you go big with? And also assessing, doing like a pre-mortem. So, okay, if you're, let's say you don't get what you want. So my kids have grown up and they're out of the house and I'm still working. We never got a place in the mountains and I didn't have a terrible life, but man, I was way too busy for my kids. And, now they have kids of their own and I can't even spend that much time with my grandkids because I'm still working so much because I have to. Like, what happened? Why is that? So it's trying to place yourself in that point of view and doing again, that's called a pre-mortem. So values, goals, decisions, and then finally actions. Here right quick with the pre-mortem, the reason we do this is because like, chances are you probably have a decent idea. Obviously, there's going to be black swans and just things you're not aware of. But most people know the things that they at least can control that will probably trip them up. It's like, man, I'm a workaholic. And I just said I want to make sure I spend time with my kids. The most likely thing to doing that is me just deciding I need to work more. It's like, okay, you admitted that first. That's important. And two, when that thing starts sneaking up, you can say, hey, wait, you're that thing that throws me off from doing what I actually said is important. Or maybe it's just like, man, we couldn't afford it and we never could retire because we spent way too much money at Chick-fil-A. And I don't even like Chick-fil-A that much or whatever. It's like, oh, okay, well, just, that now. Like, you can say, hey, wait, you're that thing that throws me off. And you can peek around the corner. So again, like values, goals, decision, finally actions. The good news is if you've done a great job with all those other things, the action part is really simple. It's not always easy necessarily, but it's pretty simple. And again, that's where most people start off with taking action. It's like, okay, I'm 36. I've never saved for retirement. Let's do this thing. And all of a sudden they're like, all right, I'm going to buy a mutual fund. I'm going to do this. I'm going to, Roth and that and that. And it's like, dude, you're just taking action without even knowing why or what, or the implications or the trade-offs. And suddenly like you're trying to work a puzzle, but you never even looked at the picture on the front of the puzzle box. You're just putting pieces together. And that's probably not going to work out well.
So knowing that success is different for everybody that comes through your door, what are some of the common mindsets that people have that make them successful that work with you? Is there any kind of commonality that you see of people that actually achieve their goals and that end up happier, healthier, and wealthier over time?
Yeah, I probably sound like I'm just beating a broken drum here, but I think a lot of it comes down to it's the people who can distill down to them what's important in a simplistic manner and then keep that top of mind and allow them to be corrected by that when necessary. So like for our clients, after we go through all that stuff, we have them create what we call a statement of financial purpose, which is basically a mission statement for your money. Mm-hmm. And that mission statement, that's going to be an accountability measure. Because like, man, I want financial freedom so I can spend significant time with the people I love and be able to be generous to others. It's like, okay, that's what you said is important for your money. And then if you come to me and suddenly you want to go buy a Ferrari, it's like, hey, maybe you really want that. And maybe that's great for you. But to what will that, and if so, to what extent will that detract from you spending time with the people you love and being able to be generous? And if it detracts from those things, you either have to change your action or admit that the Ferrari is more important than the love and being able to be generous. Like, just admit it. So it's that the ability to be corrected. Like, I'm not telling you what's important to you. I want to learn that and allow you and hold you accountable and help you with that. But a lot of times it starts off with saying like, okay, this is where it is. And let's make sure we stay within those barriers that I placed up, because there's things are going to come up over time. They're going to be tempting. Let's keep going forward to what we said is important. And again, like there's a business coach that I've listened to a lot, and one thing she says regularly is when your vision is clear, the decisions are easy. And I love that. Like it's a matter of articulating, this is what's important to us. Therefore, when these trade-offs come up, when these decisions come up, we know where we're going to go. We know how we're going to handle it, because this is what we're going for.
On the other side of that, what types of decisions do people tend to regret the most?
Man, I've heard a lot of regret stories over the years, unfortunately.
Other than not buying Bitcoin, of course.
Yeah, of course. I wish I would have bought Bitcoin the first time I heard about it. That's a common one. It sounds cliche, but cliches exist for a reason. It usually has to do with relationships. I have had countless conversations with families, and a lot of times in tears, about the time that was missed. Like, man, you can have very little money or a whole lot of money. And a lot of times it's the people who have a lot of money because they know what they did to get that money. And it's like, man, I always wanted to have money so I can, be there and make a lot of memories with the kids and take them all these things. And I realize now that, they don't say that themselves. They say, oh, I wish I wanted to have all this so I could do this with the kids. And then I have to ask them, well, did you do it? And then they realize, well, I guess I didn't. No, and that's that moment of regret sits in. It's like, okay, yeah, I never did. And a lot of people they go through life, 1 year and then 20 years goes by real quick. And, I'm very cognizant of that. My oldest is 7, my youngest is 1. And I'm very aware how quickly it'll go until they're out of my house. And, I want to be aware of that. And if amassing as much money as possible is a primary goal, then admit it. But most people, and again, that's where, money's a communication mechanism. It helps people communicate what you value. That's what money does in the marketplace. It communicates value in place for a good or a service. But it also communicates what I value. Like, it's important that our family has food to eat. That's really important. So I put money there. It also communicates value in the sense, like, I want to make sure that we can go on a good vacation and make those memories when they're young. So I'm going to use money for that. Money is also the number one cause of divorce basically every year. Because a lot of times people say, hey, I value you. But then the way they spend their time, their money, doesn't say that. And that brings in these mixed signals and people get hurt. And sometimes that's just the case. Like, man, you said that and you spent your resources there, but usually it's accidental. So like, growing up, I remember as a kid hearing like friends, parents, and people say all the time, like, oh man, I've always wished we could go to Europe. It seems so beautiful. Like, just if we could do that, that'd be amazing, but we can't afford it. It's like, I'm like 9 years old. It's like, dude, I don't know how much a satellite costs, but like, you have a satellite on your house, so you can get 400 channels. Do you want to go to Europe, or do you want to have 400 channels on your TV? And yeah, I know it's not going to happen overnight, but give it a few years. So is a whole lot of channels or Europe more important? But the way you're communicating to me is TV is more important than Europe. Like, cool, just admit it. Just start there. And again, that's a simple place, but it can go a lot deeper real quick for communicating things. So, again, I think people get there accidentally to others, but then accidentally on their own. It's like, again, it just comes back to this lack of purpose or intent. And they go through their day and their week and their year, and the way they spend their resources, again, their time, their money, these things accidentally happens out of survival, which is fine. Like, again, surviving is a high value thing, so you're going to use money for that. But a lot of times, again, we assign excess value to things that we don't truly place a lot of worth in. So long-winded, but
So you've personally gotten to see this work out both to the positive as well as to the negative for people over the course of years, which gives you, I think, a really unique perspective. You've also had Bitcoin introduced into your life, and you've walked people through these decisions. So I'm a big believer in not just listening to what people say, but watching what they do personally. So how have your personal decisions and allocations changed both as you've watched people make these decisions, but also as Bitcoin's become more of a part of your life, both directly in your business and also just in your portfolio?
Yeah. I've always, I'm the type of person I eat my own cooking. So that helps. So as I've learned things and observed things and everything, it hasn't been this like, well, there are times I'm checked, but it's usually like I adopt what I'm doing pretty easily. I am very cognizant, and I would like to think I would be anyways, but I am very regularly reminded. I was reminded of this morning in a meeting of the fact that time is precious, and I talk to people starting out business or a job, and I talk to people on the end of a career and the end of life all the time. And again, the whole relationships, the time with kids, time with your spouse, like that stays very top of mind for me. About a month ago, I got a phone call from a family I've worked with for the last 5 years, 6 years. Is the wife letting me know that their husband just died. He was 40. Yeah, that I stayed up most of the night that night looking through our notes from conversations over the years. And, I asked them that question years ago, like, hey, if you find out that you had 5 to 10 years left to live, what would you change now? And when I asked them that, like, they're mid 30s. I never would have, none of us would have thought that'd be the case. They have a young little boy. Like, the time that they mentioned truly was missed. It's like, man, the next day I sent an email to other clients, and I obviously don't share names and all that stuff or private information, but I sent emails like, dude, like, just to remind you, be aware of this. And I do live in a spot that I regularly talk to people about these things. So it is top of mind for me regularly, which is fantastic. But I don't want to grow cold to it. I mean, as far as money side of things, again, I eat my own cooking. If that's how I'm invested, I'm an odd investor, I will say. I think I align like most business owners. Like most business owners, if you own a business, not just as a job, but as an asset, like you recognize what you're building. And if you're trying to actually build an asset in a business, something of enterprise value, you realize that you probably should invest there, or you have to invest there. So, Kendra and I, personally, what we do is basically we just own Bitcoin. We do own a couple of stocks, but those stocks are in the Bitcoin space. It's like a handful of Bitcoin related companies. And then we own Bitcoin and own my company. Like that's it. And, we used to own a house and now we're renting. So we could buy more Bitcoin. Yeah, we're sort of nuts, but I don't expect my clients necessarily to invest the same way I do. And definitely there's lots of caveats there with how and why we make these decisions and the navigation of these conversations, both between she and I, and the trade-offs and sacrifices and the conviction that we have. But I mean, obviously, if I didn't understand Bitcoin, I wouldn't be invested in the way that I am.
I mean, you're an oddball, but you're an oddball in good company, which, I'm exactly the same. Most of my net worth is tied up in either Bitcoin or Bitcoin mining related investments, most of which are, my own business and my own personally held assets that have something to do with that business. It goes along that, I mean, when you get into the Bitcoin space, Saylor has this, I'm going to misquote him, but if you know that you have the best asset, then diversification is just selling the best asset for a less superior asset. So I definitely follow that chain of logic, and even though growing up in the investment world, I heard diversification touted 1,000 times in 1,000 different ways, including, Ray Dalio, the way that he thinks about the all-weather portfolio and the way that Buffett approaches diversification. But even if he never came along to Bitcoin, I think Charlie Munger's allocation strategy of a few very well-placed large bets, high conviction bets, if you understand them, if you've got the education behind them, if you know your why, really starts to make a lot of sense, especially if you're in, we don't all have the same amount of years on this earth, but the first half of your life, if you've got a good idea of what you think the future might look like, it's kind of silly to hedge your bets with things that you don't have as much conviction on. But how would you maybe disagree with that for people who aren't in the same situation as us?
Yeah, I mean, again, like that's personally how I'm allocated. We could argue, like, so for me, when I have excess cash flow, like it doesn't necessarily automatically go to Bitcoin. I do have to assess, do I, again, running a business, you do the same thing. It's like, okay, do I hire another person? Like, people are expensive, especially like financial planners. Like that's a few more Bitcoin I could buy every year. So do I hire a person and allocate to grow my business, or do I allocate this to Bitcoin? And when I make that decision, it's like, okay, what am I buying a Bitcoin, or what am I buying if I don't put in a Bitcoin? If I put in my business, if it's another key hire, is it growing a revenue and profitability and a multiple? Is it growing just time back so I can have time for myself in other ways? Like, what am I allocating towards? So even for myself, I am diversifying and I'm making decisions of allocation even outside of Bitcoin. Now, second, I am in an unusual position, and as I guess it's not unusual. There's 100% of us here are in this position. But I own a business, and I think my business will do really well. Everyone likes to think that, but I really do think I will. And in call it a decade or 2 decades or whatever, when I decide I want to exit my business, I'll have an asset. Things would probably be a little bit different if I had a W-2 job. Like, this is an asset, my company. If I had a W-2 job, that's not an asset. So therefore, my only asset truly would be Bitcoin, But because of how I am, I do have several assets. So if you look at really my total net worth, not my liquid net worth, but my total net worth, really maybe half of it's in Bitcoin. So you have to approach it through that lens. Now, yeah, as far as your question, I just talked for 5 minutes on something you didn't ask about. But to your question, as far as diversification, I would say that, it's sort of in the vein, like, how much Bitcoin should I buy? What should be my allocation? Yeah, do I diversify? I wrote a paper a few months back that looked at the triage that I go to when we're trying to figure out asset allocation specifically to Bitcoin. There's a whole lot of things that go into making that decision. One of the simple things is time. If you said, "Hey, Bo, I need $200 tomorrow because I need to go out and, I don't know. Let's say your windshield got cracked and you didn't have a windshield on your car. You have to get a new windshield tomorrow, okay? And it costs $200, and you have $200 today. It would, if you put it in Bitcoin, and your Bitcoin went from $200 to $199, and now you couldn't buy a windshield, and maybe a big snow came through, you'd be toast, or maybe not toast, you'd be frozen. So, at the same time, like, yeah, maybe your $200 goes up to $205, but the risk there of trying to make an extra $5 with the risk of not being able to get that thing you really need determines that. That's where an emergency fund comes in. Is how much do you own an emergency fund, and if so, to what capacity, and how do you allocate that? And then at the other extreme, this speaks to not risk tolerance. Risk tolerance is how much volatility can my stomach handle, or my sleep test. When I lay at bed at night, is my stomach in knots because of how I'm invested? That's your risk tolerance. Your risk capacity is how much risk truly can you afford to take or not take. See, that's another issue on the other end of the spectrum. Is a lot of people think that Bitcoin's too risky, and they think that X is not risky. The problem is there's risk in everything that you do. There's just different types of risks. I think it's called hypochondriacs. Those people who just like sit in their house all day because they're afraid to go out.
Yes.
So a hypochondriac. Maybe you're a hypochondriac, and because you feel that if you go out of your house, I don't know what they're afraid of. Something's going to happen. So you sit in your house all the time, and maybe because you never leave your house, you're vitamin D deficient, and you get obese, and you sort of go crazy. Like, that's risky. Like, you're probably going to die earlier now because of the decisions you made. So you may have avoided, I don't know, the kidnapping that you thought would happen if you left your house, but you are inflicting another risk to yourself. That's this massive like barbell extreme. But I mean, if you're sitting in 100% cash, some people are like, I don't want to take any risk in the market or with Bitcoin. I'm just going to put it in my mattress. It's like, dude, you realize what happens with inflation? Like that is a guaranteed, known, not just a guaranteed risk. That's a guaranteed loss due to that risk. So you have to recognize like there is risk in everything. So yeah, like should you diversify? Maybe, but like in what capacity? What are you trying to solve for? Again, that's sort of a non-answer. But yeah, you have to triage these types of things. I mean, there's other points of view that come in through here. It's like, okay, well, I have people who come to me who are like big into Bitcoin, and it's like, hey Jim, I really believe in Bitcoin. We own a whole lot of it, but I need something that if Bitcoin goes down, probably not a 51% attack, but maybe because of a big macro event for a few years, I need to know that I'm not going back to work because my Bitcoin stack just dropped by 80%. What do I do? And that's where, are you trying to amass as much money as possible, or are you trying to do what's important to you? And that's where diversification can come in. It's like, man, I really want to make sure I'm not going back to work. In my 70s, it's like, oh, okay, well, let's hedge that risk. And maybe owning more Bitcoin, if Bitcoin goes to a zillion, maybe owning all the Bitcoin would be the absolute best thing. But again, the goal was not to have a gazillion dollars. The Bitcoin was to make sure you don't, or the goal was to make sure you don't go back to work. So yeah, it's this, again, it's a big order of operations of if this, then what, and problem solving. It's a lot of fun. Like what I do is basically I basically just work puzzles all day. And these puzzles are, again, an articulation of what people said they want. And that paints the picture. Mm-hmm. But then you have emotions that get thrown in the mix, and suddenly people throw in new pieces of emotions. And then suddenly, the IRS dumps in new pieces as they change the tax laws. And it's a lot of fun.
It's kind of like, framing this not as who makes the most money over their lifetime, because the winner of the game is not the person who dies with the most money, right? That, especially with, entrepreneurs and investors who get very serious about return and just building wealth, it's really easy to lose sight of making an optimal allocation that leads to a good life, not just a very big number. And piggybacking on that, you can make very optimal investment decisions from an allocation perspective and grow your wealth very large potentially, but have a suboptimal emotional experience along the way, right? When people tell you about selling your chairs to buy more Bitcoin, like it's good to have one chair. It's good for your quality of life, your ability to think clearly and be comfortable in your world, to have a chair or two. And to the degree that you try to over optimize some of these decisions, you're removing your ability to be resilient in the face of price movements, a storm with a cracked windshield, as you were describing. There's all these real things that happen in life that if you are, quote, positioned optimally, but don't have some reserve that allows you to move and adjust when real life happens, that is no longer an optimal allocation, and it may force you into making a very bad decision and then compounding it with a bunch of emotional shrapnel that comes from that first bad decision.
About probably I think 4 years ago, I did like weekly Q&A, Ask an Advisor, with a Bitcoin company. And so each week I'd be on whatever it was, Twitter Spaces or something like that. And I'd spend an hour, people just asking me random questions. And every week I would have someone ask me about having an emergency fund. And I'd always get my thoughts. And every week I'd have people telling me I'm an idiot for saying that you probably should have a US dollar emergency fund. To what extent and everything, that depends on a lot of other factors. If you have a line of credit on your house, something like that, maybe that would help you reduce your need or whatever. There's lots of factors that go into this. Anyways, I took a ton of flack every week for saying that you should probably have an emergency fund and like publicly. And then, not to say I told you so, but yeah, sure enough, like in the last couple of years, I have had quite a few people circle back to me privately and say, "Hey, I gave you a lot of flack a few years ago for saying you should have an emergency fund, and it turns out I have less Bitcoin than I used to." And a lot of these people, they had to sell some Bitcoin at 16 versus being able to deploy. So, you have to think through. A lot of what this comes down to is sort of going back earlier. Is like you don't really necessarily want retirement; you want flexibility. And your money, it's like, you're not trying to have as much Bitcoin as possible. You need to be agile and flexible with your money and also your time. It's like, okay, if Bitcoin drops a bunch, do I have dry powder to deploy? Do I have the ability to still live and take care of my family? And again, I'm not saying like, again, I'm talking as a guy who owns most of my liquid net worth in Bitcoin. So don't say that I'm a bear. I'm trying to help protect you, like, if maybe you don't own life insurance, but if you do own life insurance, you probably don't hope you die, but you own it in case that happens. You're protecting against something, and that's really, I mean, every investment is insuring against something. Like people buy the S&P, the whole monetization of the S&P 500. The reason most people buy the S&P is not because it's this like massive investment vehicle. They are protecting against the debasement of their dollars. And that's why we have monetization, the S&P 500 and in houses and all these things. When you buy Bitcoin, you're protecting against the devaluation of the dollar. When you keep dollars, you're protecting against the coinciding of needing money and Bitcoin being down in purchasing power. Like that's it. And that's fair to say. You say, well, one Bitcoin's one Bitcoin. It's like, yeah, it's true, but we're looking at the real world purchasing amount. If you want to call that dollars or purchasing power, whatever it is, it's really important when you need it. So, yeah, like what are you trying to protect against? And again, I think one of the biggest things I'm trying to protect against is long-term wealth erosion, and the inability to reach my goals. And that's why, that's why I allocate the way I do. But also, I want to protect against, something that happened with Bitcoin and that coinciding with me needing that money. And suddenly I sell half my stack at an inopportune time. So I want to protect against that too.
Right. And you mentioned flexibility, which I think it's such an important distinction, because when I was going through my own journey of kind of unwinding my real estate portfolio, getting further and further into the Bitcoin space, the big issue that came up for me was, but this cash flow makes me feel really safe. So I saw mining personally, even though it's suboptimal a lot of times to sell your coin for electricity or for living costs, knowing that, if you hold on to that for a couple of years or 10 years, you're usually far better off. But that mental crutch of having recurring income coming in on a regular basis, even if it didn't make, as much money one month as it did the month previous or the next month, having the flexibility of knowing that something was coming in on a recurring basis and that I could sell it if I needed to, made me feel more safe than just allocating 100% to Bitcoin. Now, whether that's the right choice over any given time frame, we can have a hot debate about, but I'm curious, how do you think of things like mining in the context of the Bitcoin space?
Man, actually, I sent out y'all had a like a webinar. Was that on Thursday of last week, maybe?
About BitAxes?
Yes.
The solo miners? Yeah.
Yeah. I sent that out to, I think, all of our clients, and I got a lot of fun feedback on that. So I've been having this conversation of like, how do I mine Bitcoin? When do I mine Bitcoin? And I think that's an interesting conversation. Like, I personally own some publicly traded miners. I'm sort of a moron when it comes to anything tech. Well, here, side note, like people say, like, I don't understand Bitcoin, so I don't want to buy it. It's like, dude, bro, I have zero clue how I'm able to see you and talk to you right now. Like, I still use Zoom. So yeah, I admit I'm pretty dumb when it comes to a lot of this stuff. And also, if I had miners at my house, like I have 4 young kids, like I have to replace credit cards and stuff like all the time. I feel like my 1-year-old daughter, she regularly gets my wallet, or like the kids, I don't know, they break everything. It's like having a bunch of raccoons live in my house. So if I was running miners inside of my house, they're going to get water spilled on them and trashed like immediately. I know it. So I'm not going to home mine right now. I look at this like, well, what's the opportunity cost? What am I looking to solve for? Why do I want to get into mining? Do I want to get into mining because I want to participate in the network? Do I want to get into mining because I want to have regular cash flow? Do I want to get into mining because I want to get the highest return on investment? Is it cheap? If that's the case, is it cheaper to deploy that dollar to buy Bitcoin or deploy that dollar to mine Bitcoin? And a lot of that depends on, obviously the hash rate, but also like, what is your cost per kilowatt hour? And again, like that goes back to what you were saying. Is it total accumulation the primary goal, or is is not only that, but the coinciding of that plus this need of having cash flow. Bo, like while you're talking, it's like, well, maybe that's the most opportune. Maybe that's not the most opportune thing to do. It's like, well, I guess the good news is like you're not an equation. You're not a spreadsheet that we're trying to optimize. We're trying to optimize what's important to you. And man, if that means having some cash flow is helping there, it's like that's fantastic. Michael Schmid was out in Montana with us. He's got a cool setup where he home mines a lot. And again, that would not work for me for a lot of reasons. One, again, my kids would destroy it. Two, I couldn't figure it out for the life of me. And then, and then three, I live in Texas. I don't need heat. I need cold air. Now, fortunately, Schmid is currently working on compressing that hot air to cold air. And man, when he does that, I definitely will have an HVAC system that is a Bitcoin miner at my house.
That guy's wickedly smart. And actually, as we record this, I think his podcast with us is going up today.
Oh man, that's awesome. Yeah, Schmid's awesome. Yeah, we look at that as like what, again, a lot of people I talk to, it's like, I want to get involved in mining, just to be involved in the space, sort of like, running a node. It's like, yeah, you don't have to run a node, but it's sort of part of securing the network.
I call it my second engineering degree, was getting into mining, because it taught me so much more about how the world works than, frankly, anything that I learned in school. So whether it makes money or not, thankfully it has, and I consider it a great part of my personal strategy. But even if it's a tiny, tiny percentage for people, there is value to me to understanding what you're working with. Even if, let's say you're like you and I, and it's essentially 100% Bitcoin allocation in some form or another. Even if 1% of that is mining, and that gets you a deeper understanding of how that asset works and how the network works, I see that as positive ROI, partly because one of the things that the kind of like sound bites I give people is one of the only things that's going to return more compounded annually over time than Bitcoin's returns is an investment in yourself. And part of that is investing in your own knowledge of what you own and how it works and what part it plays in the world.
You met Kendra out in Montana, and Kendra has not reluctantly, that's not the right word. She has passively and fully trustingly followed me on our financial journey for the last several years. She fully trusts whatever I do with our money. And she's familiar with Bitcoin to an extent, but she didn't really care about it. Even going to Montana, she's like, yeah, I'd love to go get away from the kids for a few days. And she took a whole bunch of books, and she planned on sitting on our back porch and reading all day. She's like, I don't want to go talk about Bitcoin all day. It sounds like a terrible experience. But then she ended up talking to people a lot. She really enjoyed talking with you and to Schmid. And, we got home, and, a lot of nights now we'll sit there and like, we spent nights me explaining the difference between M1, M2, and the old M3, or what's the difference between mining and a node, or all these things. And she's like super into it now. And it was funny, a few weeks ago, she's like, man, I think we should move all of our money into Bitcoin. It's like, babe, I don't know how many times I've told you, but we did that like 5 years ago. And I guess the reason I say that is because she knew that. She knew that we did that move a long time ago. But along with that, beyond the the visceral knowledge of like, yeah, we own this thing. Once you understand it, it's like, okay, now I get it. And that can come with owning something. And that ownership can come through education. That could come through being hands-on. Something that's like, it's like raising a kid. If you just give your kid like maybe give your kid a really nice car, maybe they'll take care of it, especially if it's a good kid. But man, if you have a kid, like maybe from when they're like 10 till they're 16, your kid and you spend every weekend in their garage together fixing up like an old classic car, and they turn 16, you give them the keys, man, they're going to take care of that thing because they have ownership. They owned it either way, but now they understand it. And there's that sense of like, okay, I know what this thing is. I know the value of it. And I think that can come with, again, education. If you don't know what you own, I own Bitcoin, but I'm going to take my Bitcoin and, buy it in this other thing. Like you never understood what you owned. And the deeper of understanding through education, the more conviction you're going to have. And again, that can come with just hands-on through mining or node, or again, just deep education.
There's such a, not financial advice, obviously, but people often be like, you should study something before you own it. You should get really acquainted with Bitcoin and then go buy some. And a lot of team members and I have come to the conclusion that it's really the opposite. And that is that when you're studying something without a little bit of skin in the game, it's very hard to form much interest, much drive to really go deeper. And there's something that clicks once you actually have a little bit. Doesn't have to be a lot, but something to get you off zero that makes you want to dive a little bit deeper. And to me, it's just a self-reinforcing positive feedback loop. You get some, you understand it deeper, you get some more. When you get some more, you've got even more incentive to go and understand it deeper. And as long as that journey of knowledge keeps informing you of things that continue to confirm your initial bias that this is a good thing and this is something that I should have, it was a positive decision for you to actually get some before you analyze it to death. What do you think about that?
I'm hesitant to say that I fully agree, but it's not because I don't agree. It's because the analysis paralysis sort of thing that people can fall into. And
Yeah,
it's
it's
like,
really like,
I don't know. I'll look into it one day. It's like, no, you're not. No, you're not.
right.
Um, so
How many times did it take you being exposed and doing nothing that you could then later regret? Where if you had even, a single coin in 2015, a couple $100, it's not much risk. Come back and look
yeah,
at it a few years later, holy crap, like what an interesting decision my previous self made.
yeah. No, I can. That's where I'm trying to be measured with my words. It's not that I disagree. It's how that comes about. Some people. I think it also sort of has to do with personality. Some people are quick starters, and those people probably should just jump in. But the problem with a lot of problem with quick starters could be that they're quick to flip to something else. So you want to make sure that you quickly pile on education. Some people are slow starters, and if you throw them into something and maybe Bitcoin drops from 69 to 16, they're going to feel burned. And so that's where you have to. You can't have endless education without action. But you also can't have action without education. I mean, I guess you could. You could buy a bunch of Bitcoin, lose your wallet. There's there's a meme. It's the two guys and I should know what it's from. It's two guys in a convertible, and one of them says like, "Wow, how did you hold for so long?" And the guy's looking at him and he's like, "Oh, I lost my seed phrase years ago." You could be that guy. Maybe you're a quick starter. You lost your Bitcoin, your address, your wallet, and you're not educated, but you just held it out of default. Anyways, yeah, I think it's a pairing. And I think some people, I recognize that I am in a privileged place to get to orange pill people. Like most people aren't invited to, hey, tell me what I should do with my money. So I'm invited to that conversation. So I have that inertia of when I say like, hey, I think we should own some Bitcoin and here's why. We're already heading that direction. So I'm not starting from zero. So when I do say we have to anchor into education, it's not with the given that they're going to buy Bitcoin. And I don't want them to buy Bitcoin if they don't understand it, because that would be really dangerous for them. But there is that inertia of like, all right, that's why they hired me, is to get my thoughts. So I agree with nuance.
Thank you. And
Okay.
if anybody listened to that and you're thinking, okay, both Bitcoin and mining seem too complicated. One, for mining specifically, we do a lot of free education. So if you just find our website, our newsletter, that'll automatically subscribe you to like a monthly educational webinar that goes through this stuff. I recognize that it's very hard to approach unless you've got some serious reason or some friend who's kind of nudged you into it. We've also got tons of calculators that we'll happily send if you just message us on social. But if you're just looking at getting into Bitcoin and having Bitcoin integrated into your financial plan, Jim, how would you, for someone who's unsure of where to begin, how would you advise them on where to start? What would be your advice on getting in, maybe even starting to work with you if that's something that appeals to them?
I guess in a just very practical, like actionable way, it can be it depends on personality, I would say. There's some people like, you should never own the ETF. It's the worst thing ever. But frankly, like maybe your grandma's 84. Like maybe she lives 9 states away from you. Like, is your grandma going to go hop on the river, buy Bitcoin, go get a cold card, move it over to there. Like, is she going to do that? Or is she just not going to ever own anything if there's no alternative? So it's like, dude, maybe it's not the end of the world if she go and buys the Fidelity ETF. It's like, all right, like we have to concede at some point to something. So like choose your battles. Some people's personality is like, man, they are really into the tech, and the way to orange pill them is to first get them to the mining side of things. I have friends like that. They're like, I didn't care about Bitcoin at all, but the technology really intrigued me. And that's what got me into realizing, wow, this thing has deep value because the technology is so amazing. So maybe that's you, or maybe you are most Bitcoiners, and where you end up is like, go buy Bitcoin on an exchange, move it to cold storage, and call it a day. It depends, or maybe it's a mix of those. Like it's most of our clients own Bitcoin directly, and I run a fund that is very active, and it currently allocated to a lot of things in the Bitcoin space. And one day it won't be. But, we try to get exposure in a lot of capacities to this stuff, and not trying to fit a square peg in a round hole. I don't want to kill inertia by forcing you to do something that's going to keep you on, sort of what you said, Bo, like, maybe you should just do something and then learn. And I'm not saying like, figuring out what you should do, what makes sense for your personality. That's something, I guess, sort of a plug. Like that's part of what we do is if and what way and what capacity and what depth does Bitcoin fit into your financial plan, and helping you make those decisions and navigate those ongoing decisions that are inevitably going to come up over time. Like that is what we do.
So as we wrap up, I'd love to get just a cherry on top from you of if people do see some of the long-term vision of this, what do you think the potential is for the people that integrate this into their financial plans? What do you see as sort of the potential for this to reshape wealth building for people in the long term?
My mind wants to take that a lot of directions. I'll take it. What I think is one of the most interesting directions is the thought of what if we actually had good money? Like back in, was it 21 or whatever, when houses went up, like value went up, air quotes for those who can't see me, house values went up by 30% in a year. That was a really hard question I had to field like all the time. Hey, Jim, we want to buy a house in a year. How do we save for it? It's like, well, houses are going up by 30%. Like, what do you do? It's like, do you buy bonds and pick up a 2% coupon? Remember, that was before interest rates went up. Do you buy stocks and hope that when you're ready to buy that house, the stock market doesn't melt down? Do you park it in cash and hope the market doesn't keep going up where, a year from now you buy 30% less house? Do you drop it into Bitcoin and hope that Bitcoin doesn't do, whatever? It's like, that's where some people talk about Bitcoin. It's like, oh, well, yeah, you're going to make a lot of money, but one day people won't make money. It's like, dude, that's what good money is. Good money is stable. And one day, if Bitcoin does what you and I hope it will, like Bitcoin will be super boring. Like, we're not going to sit here and want to talk about Bitcoin. There'll be probably way less Bitcoin podcasts, or at least less exciting ones. It'll be like, I don't know how many podcasts are about like the Fed now. Like, it'll probably sort of like that. Like, people will be interested in it, but it's not going to be this thing of like, how do you make money on Bitcoin? It's how do you preserve your money? And it's really interesting through the implications of, I just want to preserve my purchasing power over a prolonged period of time. And because of that, I'm not forced to try to do gymnastics so I can retain my purchasing power for 30 years from now. So the simplification of decisions will be fantastic. I'm just really excited to see how that plays out. And one day I'm hoping that Bitcoin will be super boring.
You heard it here first, folks. If we're all successful and talking about the right thing, one day this will be boring as fuck. And we'll all be super happy about it. Well, Jim, thank you for sharing so much value. That was really enlightening for me just to hear about how you think about financial planning. I'm sure that everybody listening got a ton of value out of it. Just really want to thank you, one, for your time. I'm super grateful to call you a friend. Thank you for giving me one of the best experiences that I've ever had in my life with people of like mind, getting to hang out in Montana for those few days. That was absolutely my favorite trip this year. And look forward to the next one. But before we sign off, just wanted to give you an opportunity to connect people to where they can find you, where they can find intentional living, how, if they want to start working with you, they can get started with that. Just want to make sure that anybody who heard this and thought, holy shit, I need this guy to help me run through this decision process and make decisions really well far into the future, that they know how that they can get in touch with you.
Yeah, no, Bo, I appreciate you coming on here. It was fun hanging out in Montana. Looking forward to next year. 10 and a half months from now, we'll be back in the mountains hanging out. Yeah, my Twitter, it's Jim Crider TX, as in Texas. So it's Jim Crider TX. Also, if you're looking for me, you can hop on our website. It's Intentional Living FP, as in financial planning. So intentionallivingfp.com. Right on there, you'll see my calendar for 15 minutes. If you want to work with us, that's great. If you just have like, man, I just really want to ask him this one thing, or I've been wanting to ask somebody this, and go for it. I'm more than happy to spend a few minutes. I will do the absolute best job I can answering any question I can for you. So yeah, if it's a one-off question or anything, more than happy to chat and help in any way I possibly can.
If you're listening to this, you already know this, but it's worth saying Jim is one of the nicest, most authentic people that I've ever met, and really is out there to just help people make the best decisions for them. So please take him up on that offer. He would love to help you out, even if it's just one question. And Jim, can't wait to have you on again, man. Maybe next time we record another podcast, we'll have some interesting things to talk about in the market on our way to many years of boringness.
Yeah, we'll just sit here twiddling our thumbs for an hour.
Thank you, brother.
Yeah, thanks.